how to find stocks with high IV rank of over 90% right here to sell covered calls on to get some extra premium, extra money when you are selling options for income. This is the tutorial today with Market Chameleon. 7 days trial in the description below. We are going over some filters and we're gonna screen if you are a covered call seller instead of randomly going on Robinhood or whatever trading app that you use and looking to sell covered calls. We're gonna find high IV stocks and see what we can see. So let's get started with a quick disclaimer, of course, and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. Also, my name is Ziv, also known as Finance After 40. So let's get started with Market Chameleon in order to get to this screener and see what we got. Okay, cover call screener. This is the name of the screener, the filter. You're gonna go here, screeners, and you're gonna go here, covered calls, single leg strategy, covered calls. We're gonna do a couple of videos about that. Now, I'm not gonna talk about what cover call is in details. I assume you already know. If not, there's probably like millions of videos now on YouTube. But at the end of the day, let's say a stock is at $100. You can sell, for example, the $110 call for the next, I don't know, week, month, whatever the case, and collect $100, $200, whatever the case, as premium. And as long as the stock either go down, you win, stays the same, you win, goes up all the way to 109.99, you still win. 3 ways to win. Very popular strategy, the covered calls. And you have an outlook of a sideways market, okay? So you expect the stock to stay around the same, up and down, and not reach your covered call option call that you sold, so you can collect the entire premium. That's the goal. Now, there's, I don't know, like 5,000 stocks or something out there, at least at like 100, or at like 1 billion market and up, something like that. As far as I know, not sure. So I don't want to sell the covered calls on anything. I want to sell on a high IV rank. What does that mean? The higher the IV means that the stock, the option price is super expensive, not more expensive than what it used to be based on history. Usually it happens before earnings or volatility or whatever, or maybe the market, the whole VIX is up. But either way, the higher the IV means that if you are an option seller, you collect more premium than what you should have collected based on history. If you're an option buyer, you're paying a lot more to buy an option, and your break even is far out of the money just for you to break even. So I prefer to sell options. Now let's see the filters that I put on. Expiration, I just put October 18. Okay, this is like the monthly for October. We started a new month right now, so premiums are high. We just started literally today. Today is Monday. So from September 20, which was the monthly expiration, to October 18, which is right now, we got this basically 30 days, almost a little less than 30 days. You get a lot of option, a lot of premium to collect. You don't have to stay for the whole 30 days, but you have a lot of premium up front. That's the whole point. Instead of selling, I don't know, daily on the SPY or weekly calls. But you can play with this. You can play with this and change the expiration, next 30 to 60. It's up to you. But I like to stay with the monthly. Now what I chose is IV percentage rank to filter above 90%. Let's read. It says, okay, the percentage rank of the option current implied volatility compared against set of historical option, the same underline, at the same number of days to go until expiration, wherefore a stock price same distance percentage away from the spot. Basically, as I said, based on history, you are collecting more premium as an option seller compared to what you should have collected. Now, if I click here, you can play around. You can do elevated, which is high, subdued, which is low, so this is more for option buyers. Moderate is like average, and then you can play around with the IV percentage above 10%, 25, 50 and all that stuff, and I put above 90%, and you can go below if you want to buy options, up to you. But above 90% is like super high, super high IV rank. Now I haven't filtered other stuff, like basically there's no earnings in here, okay? I don't see any earnings. I see covered call win rate, observation, money distance from the stock, okay, and delta and stock win rate. There's a lot to play around. I just want to focus on the IV percentage rank, and let's see what we got. Now the goal, remember, the goal is not to trade 50 stocks a day. Okay, we're gonna find one, and tomorrow we can look for another one, etc, etc. So first of all, I see we got 16 pages. Before that we had probably over 1,000. I haven't looked, but let's see. I sorted by market cap. I want to sell covered calls on a high market cap stock. Now in this list, because it's 90%, you're not gonna see Apple, for example. We can change it maybe to 75% and see more. But for this example, let's see the first option. We got ourselves PM, Philip Morris. This is the tobacco company. Price $120.95. Okay, this is the market cap. Now it says expiration for the monthly, and it says there's no earning. It says C, event, Barclays Global Consumer Staples Conference. Is it gonna affect them directly? I don't know. What I do know is that it says 19 days to expiration. I think this is like business days, not calendar days. So there's 19 trading days, and it tells you the covered calls 131. Look at this, 131. We are at 120.9. $10 out of the money. Okay, $10 out of the money. And it tells you, okay, the bid call is 5 cents. Not a big deal. Not a big deal, not a big find. As I say, you got 8.3% out of the money, moneyness distance, meaning that Philip Morris needs to go up over 8% just for you to break even. You got the good win rate, 59%, 58% for the stock. It's 5 cents, $5. Not ideal. So what I'm gonna do instead of the 90%, because remember, I could go of other stuff, for example, MU. You know what, let's try MU, because a lot of people on Twitter are talking about MU. We're gonna do this, but something else that you can do is the IV rank. You can, instead of 90%, which is super high, to go to 75%. We might do this in a minute. Let's see just MU. Look at all this MU that we got in here. A lot of people are betting $100 calls, etc. I want to see the earnings. The earnings is September 25 in 2 days. I don't like that. That's not to me. However, this is a big however. We got something here that I saw. Look at this. MU. For October, I saw this one. This one caught my eyes. Moneyness distance from stock, meaning how far the stock needs to go for you to just break even. Look at this price. The price today, $93. Market cap 100 billion. And if you sell the covered calls, the 115 covered calls, you collect $80. $80 for the stock to almost like add a quarter to its value. That's pretty crazy. So your break even to sell the stock is 115.8. This is interesting. This is very interesting. I might do it for my own account. So this is pretty insane. 150 calls, collect $80. Let's see the other stuff that we got in here. 57%, 2%, 54%, 1.9, all green stuff. Okay. Something to consider. Of course, everything will change post earnings in 2 days. you want to collect, let's say you want to collect a little more than $1, you can go to do the 110. That's another option. If you're satisfied with selling the 110, remember we are at 93 now. 110 right here is 17.8, 18% distance away. You are 18% away from the strike price, and of course you collect the premium no matter what. So let's say the stock goes to 120, it's a possibility. If it goes to 120, you have to sell the share at 110, but you also collected 134, so your break even is 111.34. Okay, so something to understand. But if it goes to 109.99 or goes down below 93 or stays the same and anything in between, you collect the money and it's yours to keep no matter what. And the option, the stock, the option will expire worthless. And if you want to go even more, a little more risky, where's the 100? I'm looking for 100 right here. If you're happy, let's say you bought MU, I don't know, a week ago at 80 something, and you say, you know what, $100 I'll be happy to sell, you can collect $350, sell the $100 covered call. Another something to consider. Now if I want to look for other stuff, maybe find some high market cap stock, I can just change this to, let's say, above 75%. Now let's just see, I'm doing this live with you, meaning that it's not super high above 90%, but still when you sell covered calls you will collect income, high income, because it's above 75%, the IV percentage rank. We got TSM. Okay, let's see, there's tons of Taiwan Semiconductor, price 174.73, 900 billion market cap. That's better, and in here I'm looking for a positive number in the moneyness distance. This means that it's already in the money. This one is 14.5% out of the money. What's the trade? 200. It says sell the covered call 200, collect $113 for this pleasure for October 18, and you got earnings. Yes, you got earnings on October 11. You know, if it's up to you, maybe sell on the day of the earning, like before the earning, and until then let this number, the 114, go down to, like, I don't know, $20 maybe. So this is something to consider. Yeah, that would be, I would consider this for my own account. And if you have Taiwan Semiconductor and you think, oh, there's election, I don't know what, it's gonna be volatile, and if it goes to 200, you're happy, why not collect money and wait for the stock to be sold out, to be taken out from you at 200 plus your premium, so your break even is to 1.13. What if you bought it at like 130 like a year ago? 120, 130 was the price like, I don't know, in the beginning of the year. Something to consider. Let's see if there's anything else that's interesting in here. This one is the 205, collect $72, and anything in between. Again, I ignored the negative, I go for the positive. This one is 197.5, but you collect 140, so your break even is like 199. If you want to say, hey, everyone will dump when it reaches 200, maybe get out at 197.5, and your break even is almost 199 for the same expiration, same everything. 13% upside cushion just for you to break even. Why not? Something to consider. And that's what I have for you today. Instead of just randomly go on Robinhood and look for covered calls to sell, go for Market Chameleon, look for elevated IV percentage rank, either 75%, 90%. Anything above 50 is what people on Tastyworks are doing, so we might do a video above 50. We might have a lot more options. Elevated is also good. And look at the results. We got now 44 pages to go over, but you see the first page is dominated by TSM. After that we got Avego, and so on and so on. We can keep going like that. The next video we're probably gonna do this by distance and see what we got, or by delta and see what we got. Either way, 7 days trial for Market Chameleon, link below. I'll see you next time.